Hello, and welcome to FinInvest Niger. My name is Tom Princeville. I'm a certified securities and investment specialist, and I've been investing for the past 2 decades. So in the course of this presentation, I want to talk about the fundamental analysis of, how do I pronounce this company? Is it Zichis or Zichis Agro-Allied Industry? I hope I'm getting it right. Zichis Agro-Allied Industries Plc. So we want to see precisely whether this newly listed company in the market is a buy, is suitable for your portfolio or not. So let's start with the company's revenue. Although the financials here covers for only 3 quarters, that's the 9 months ended September last year. The 4th quarter result is yet to be out. This particular result is for the previous 9 months. That's 1st, 2nd, 3rd quarter, making it 9 months. The actual final quarter result is yet to be released. So the company made a revenue of 464.00 million. 464.00 million as against 209.211 million. And so the revenue here rose by over 200 million, from 209 million to 464 million. There's that increase in revenue. We move to the company's gross profit. The gross profit climbed, it jumped from 82.059 million to 251.392 million. That is from 82.052 million to 251.392 million. In other words, is climbing from 82 to 200 and 251. That is an increment of over 100 million. So let's equally highlight the company's profit before tax. For the profit before tax, the company recorded 43.363 million naira. 43.363 million naira as against 201.042 million naira. So from 43 to 200, that's it's over 150 million naira in increase in profit before tax. Okay, let's examine the profit after tax. For the profit after tax, the company recorded 34.713 million naira as a 3rd quarter 2024, as against 166.537 million naira in a 3rd quarter 2025. There's an increase of about 130 million naira. So you could see this level of increase all through the given parameters here. We now want to x-ray the company's earnings per share, which of course is the most important figure in this table, the earnings per share. You discover that there was an increase, in fact a tremendous increase, an increase of over 100%, all right, almost about more than 200% in this value. The company recorded an earnings per share of 6 kobo in the 9th month, 9 months, ended 9 months of the 3rd quarter of 2024 compares to 28 kobo in the 3rd quarter 2025. You could see this increase here. This is almost like times 3. Times 3 is what? Times 3 is 8, from 6 to times 3 is 18 kobo. All right. Times 4 is 28 kobo. This has gone by over 300%. This particular increment is just so wonderful. It's fantastic. Look at the level of the level of growth from 6 naira, from 6 kobo to 28 kobo, an increment of about times 4, over times 4. That's over 300%. So we are through with this segment of the analysis. This is the profit and loss segments of the financial statement. We want to now highlight the balance sheet and the cash flow statements in the other section of our presentation. So you realize that the company's price here, the share price is given as 10 naira 80 kobo, 10 naira 80 kobo, and the shares outstanding is 600 million, 600 million. All right, and the market capitalization is 6.48 billion. It means that if you have approximately 7 billion, or let's even say 6.5 billion, you can buy the whole of Zichis Agro-Allied Industries and PLC. It's a small company anyway. So the entire market cap is 6.48 billion. The shares outstanding is 600 million. And then we want to highlight the other portion of our analysis. Let's go to the cash flow statement. The company has a cash of 8.464 million naira, 8.464 million naira. That's the company's cash position, cash at hand, cash in the bank, cash in fixed deposit, as the case may be, amounts to about 8.5 million naira. And this is the equity, the company's equity here. Either equity or shareholder fund, the same thing. You simply subtract the company's liabilities minus its assets. That will give you 1.01 billion naira. That is the company shareholder fund. Now the equity per share here, you simply divide the equity figure by the number of shares outstanding. That will give you 1 naira 68 kobo. This particular figure on its own does not really tell much, doesn't really reveal much, but it's there for you to make comparison with the actual company's price. The company's price is share price is 10 naira 80 kobo, and it's 1 naira 68 kobo. So you try to compare this and this. You subtract this from this. If the difference is much, that means the company is expensive. And if the difference is small, that tells you that the company is cheap. All right. So the company isn't that cheap because of the PE ratio here is as high as 38.57. 38.57. And how do you arrive at the PE ratio? Is by simply dividing the share price by the earnings per share. Divide 10.8 or 10 naira 80 kobo by 28 kobo. That will give you 38.57. All right. So it's equally telling you that for a single naira of earnings of the company, you are paying roughly 39 naira or 38.57 naira. Okay. So you go to the market to buy an item worth 1 naira. So in this case, you are buying that item worth 1 naira. You are buying it for 38.57. That's the idea behind the PE ratio. And of course, you compare this particular PE ratio with other companies in the same sector. This company is in the agricultural sector. You compare with companies like Okumu Oil, companies like Praise School. All right, so you do the comparison with other companies in that same sector, and then try to ascertain or discover how cheap or how expensive the company is. And so we will discover that though this company has made tremendous tremendous gain here, tremendous increase in earnings per share, that is what warrants this particular increase. I think it's acceptable. What is called PEC ratio is not really here. All right. In that case, you compare the company's price all over its growth rate. So if you calculate this company's spec ratio, you still discover that the company is cheap despite the seemingly high valuation here. All right, and so if you want to buy into the company, you can go ahead. All right, if you really want to buy into it, it's something you could. I think it's a buy. Although that's my personal opinion. Anyway, it's not really binding on you. So the entire exercise here, what we've done so far, is for academic purpose. It's academic in nature, and is equally for entertainment purpose. But all the same, if you really want to buy key into the company, you can make it a tiny part of your portfolio, maybe 5%, higher 10% of your portfolio, because the company, I want to believe, will do well if it continues to maintain this level of growth. All right, if it maintains, uh, it maintains growth essentially, not necessarily, at this level of times three, almost times four thereabout. But if it maintains level of growth, you stand to benefit, tremendously, from this company in the future. That's Zichis Agro-Allied Industries Plc. It's a new company listed, I think, either last year or this year or so thereabout in the exchange. Please, if you are really, are serious, and I want to believe you are serious, because for you to watch this video to the end, almost to the end, that means you are someone who is really serious about investing. Please, then you could contact me. Let me see how I can render assistance and help to you when it comes to portfolio construction and even portfolio management. So try and reach out to me, and let's see how we can pick up from wherever you stopped. Thank you very much for watching. Please, you could also consider other videos in my channel. They will be of tremendous help to you, as an experienced and even a would-be investor, as well.